All right. So what if I told you there was an indicator in the stock market that you could use to have like almost 100% accuracy? Maybe not 100%, but very close to 100% accuracy. Would you be interested in knowing what it is, how to use it? Everyone nod your head yes, because we all would. Listen, there's nothing 100% accurate in the stock market. There's not one indicator that's going to give you 100% accuracy at all. But if you can get close to that 80%, 90% accuracy, would you not want to know what that is? I would. If I knew going to the casino, and the stock market's not a casino, I'm not trying to make that analogy, but all I'm saying is if you went to the casino and you knew 90% of the time you were going to win, would you not play? Yeah, I think we all kind of would. Well, the stock market, and it's not a casino, it's not gambling, it's a whole different approach than all of that. There's an indicator that I've been using for years now, but this indicator's been, you can go back 100 years with this indicator, and it's been around for longer than that, but you go back over the last 100 years, and about 80% of the time, it's been accurate and showing us where the stock market is going. So this is what I call cycles. And this is what I use to help me guide me in, guide me out, or guide me to take some profits, or just guide me to hold and wait and buy some more as things come down. It's cycles. And so there's 3 rules that come with cycles. Rule number 1 is cycles give us a general time frame of when we're at our highs and our lows. It's not exact to the day. So what I'm about to show you will be cycle highs and cycle lows. For example, you might see a cycle high July 15th. That's the time frame. It doesn't mean July 15th we're going to have our high. The cycles don't work that way. It gives us a time frame. So we might get our high on August 7th, 3 weeks later. Okay, so that's the first rule of cycles is they give us a time frame on when we're going to hit our highs and our lows, usually within a couple weeks, sometimes 2, 3, 4, 5, sometimes 6 weeks. So there's a gap there. But they give us, then we use some other tools to help guide us to the top and, take profits as things do start to come down. Second rule with cycles is it doesn't give us the magnitude for how much a stock is going to move up or down. So you're going to see here in a sec, when I show my chart, you're going to see the cycles have this, and then they have this, and have this, and there's going to be a price chart there. The cycles don't tell us how much a stock's going to move up or down. It's just the way they're laid out on a chart. So it looks like you can say, well, it's going to hit that price, and then that price, and then that price, and then that price. It doesn't work that way. It just says magnitude. Here's a low. We're going to go into a high zone. Here's a high zone. We're going to go into a low zone. It doesn't tell you how much a stock's going to move or not move, okay? But it is going to show you low zone, high zone. So usually low you want to buy, and high you want to sell, or high you want to take profits, or high you want to just hold until it comes back down, buy some more, and then take it up, that type of thing, right? That's the second rule when it comes to cycles. And then there's one more rule when it comes to cycles. Okay, and the third rule is cycles, like there's a ton of cycles out there. So like there's lunar cycles, and there's this, and there's that, and there's this, and there's so much out there. But when it comes to cycles, you want to find cycles that can give you about 80% minimum accuracy. Now, they're not always perfect. Like I said, there's nothing 100% in the market. But if you can find cycles that are going to give you that 80% accuracy of lows and highs, you have found a really strong, really good cycle. And that's one you want to follow. Okay? So rule number 1 is it gives us a time zone of when our lows and our highs are. Rule number 2 is it doesn't tell us the magnitude of how much a stock's going to move up or down. It just says, hey, this is where stocks should move up. This is where stocks should move down. How much they move up or down, the cycles don't tell us that. Okay? And then third, it gives us an idea of. Sorry, it doesn't give us an idea, but a cycle should be accurate about 80% of the time, and that's going to give you really the confidence to know where to get in, where to get out. And then there's some other tools you want to use as well, but let's transfer over here to my charts. Okay, here we go. All right, I'm just going to expand this a little bit here. So the cycle is in the yellow, okay? And I just want to show you an example here for a sec. I'm going to go to the line. So the cycle is in the yellow, okay? And as you can see here, it goes well into the future, okay? And it actually can continue past this point. I just haven't connected it past this point, okay? So just so you know, it does connect into the future. I just haven't done all the it's about 30 minutes of work to get it to sync up and all that stuff. So I haven't done that yet. But what I want to show you here is you get these lines up, down, up, down, up, down, up, down, up, down. All right. And basically the way it works is high point, low point. So here you want to be a buyer. Here you want to either hold, or maybe if you want to take profits, if you're swing trading, maybe you sell there, right? But down here you want to get in, and then you want to, again, hold, take profits, let it come down, buy more, hold, take profits, buy more, hold or take profits, depending on what it really just depends on what your strategy is. If you're a long-term investor, then you're not going to sell here. You're just going to buy more as it comes down. Or if you're a day trader, then obviously you're going to sell it up, right? So that's how that works. Now, the question is, how well has the cycle fared? What did the market actually do compared to what the cycle projections showed us? All right, you ready for this? Here we go. We're going to put what the market actually did on the chart. All right, so let's dive into it. I'm only going to go to 2020, and as of right now, it's mid 2024. So about 4.5 years. We'll do 4.5 years of data. Okay, if you want more, I actually did a longer video where we actually did a case study where we went from 2006 to 2024. So it shows the dot-com crash. The cycles showed that happening well before it ever happened. It showed the bottom well before the bottom ever happened. So really cool stuff. But if you want that video, I'll link that up and you can go watch that. That's more of a case study where we spent probably about 40 minutes really diving into cycles over 18 years plus. Okay. But for this video, we're going to keep it super short. And we're going to go in and just start at 2020. And the reason why I want to start at 2020, does anybody remember what happened in 2020? Do you remember I call it the toilet paper scare. You remember that? Like COVID was just happening. You couldn't find toilet paper. Everyone was going nuts over toilet paper. Remember that? The lockdowns. Well, here's the funny part is the cycles did show us a high right before all that happened here. And I'm just going to just change the magnitude here so you can just amplify so you can see it more in detail. There's our high point. And by the way, remember, this cycle was here well before the stock market did what it did. But what's crazy, and for all of us that was following cycles at the time, we saw this happening well before the stock market ever got there. But then it got there, and boom, it dropped. So did it drop because COVID? Or did it drop because the cycles predicted it would drop and it just followed the cycles? I'll let you be the judge of that. But we saw that happening. Now, did we know the magnitude of how much it was going to drop? No, we didn't know the market was going to drop 40%. Like, the cycles could not show us that. But it did say, here's your high point. You might want to just hold or wait or maybe take profits if you're up nicely. And there's another buying point coming shortly after. And remember I said the cycles give us a good time zone. They don't give us to the day. They give us a good time zone. So check this out. It said by April 15th, we should be in an uptrend. And we hit the bottom about a month earlier. So within a month, we hit the bottom and we were in an uptrend. Look at that. Isn't that crazy? Right? So anyone that was following cycles, we knew in this zone that we were in, it was time to get in. People were still waiting. People were still scared, and we were getting in, and it was time to make some money. Right? So that's our first top and our first bottom. It worked. It was accurate. All right. That's what I call again, we want 80% accuracy. So far we've had one top. I'm going to take notes here. One top, one bottom. Okay. And they're both right. Hold on here. Right. And I'm going to put it wrong. How many times it was wrong? Because it's not perfect, right? There are some times where it's just off, and I'll show you why and show you what happened during those times. Okay, but there we go. There's our top, there's our bottom, pretty close in proximity. I like that. And then it came and said, hey, there's another top coming, and I'm just going to, you'll see me through it here. I'm going to adjust just the amplitude and stuff here just so we can see it on the chart. It said, hey, there's another top coming. Okay, and that was around July 13th, 2020. And the top actually happened in September. So what was that? Maybe 6 weeks later, beginning of September. Maybe 6 weeks later that happened. So again, it was in the time. It wasn't like months and months later. It was right in that time zone. So to me, that's a win. That's a top that happened within a couple of weeks of it projecting the top. And again, there's some tools that we use here. So we don't always just get out at the top. Right? When the cycle says, hey, we're in a top zone, we don't always just sell there. We actually have some tools like trailing stops and different things like that we use. So if the market does continue to go up for a little bit longer, we do get as close to that top as possible. But we probably would have been sold out somewhere around here because it dropped pretty fast, right? But then it said, hey, here's your bottom zone. And let me show you something here. I want to show you some. So the stock market did drop, but it also kind of went more sideways as well. Do you see that chop? We call that sideways chop, where you kind of just go sideways in the zone before you start to go up again. So just because we have a cycle that says, hey, you're coming to a bottom, sometimes it can mean you're coming to a bottom like you did here, like you're going to drop. Other times it can mean, hey, we're going sideways. That's something the cycles tell us as well. It can mean you're going to drop a little bit, but you're kind of going to bounce more than you're going to come down. Right. So if you're in some type of trade that's affected by sideways chop, where like if you go sideways for a month and a half, it's not good for your trade. This is again telling you get out, wait, hold, add to your position, somewhere in this zone. And look at that. If you added here, you came up a little bit, came down, added some more here, but then the momentum started and we went up. Okay. But hey, we knew we were going to go up. Why? Because we had a high zone. Right? I love these high zones because, we're just making money in the high zones. I'm just going to bring this down a bit. Okay. And so our high zone was predicted for about the beginning of 2021, and it looks like we hit it within probably about 4 weeks. About 4 weeks. So there's the top there. We hit it about right there. Again, if you had a trailing stop, maybe you would have been stopped out somewhere around here. Okay. And then we were going into a low zone, and it looks like we hit that low zone actually earlier on before the bottom. Again, low zone was in roughly about March. Bottom was beginning of April. So within 3 weeks, right, which is pretty good for your tops and your bottoms. Again, it's not exact to the day. It's going to be exact to the time within a couple weeks. Okay. Then it said, hey, we're going to go up, and that's exactly what we did here. I just need to pull this down, though. Let's pull you down. There we go. That's exactly what we did. We went up. There's our top. There's our actual top, okay, and the market of what actually happened. Again, we were about 6 weeks on that one. Again, a trailing stop would have easily got you through this to the top, and then you would have come out somewhere around here. But then we said, hey, we're going to hit a low zone. We did hit a low zone right there. Look at that, low zone, and then low zone. And then it said, hey, we're going to go up. And that's exactly what we did. We went up, chopped a little bit, hit our high here, and then we started to go down as the cycle told us we would, or showed us we would, predicted we would, right? So let me just adjust a couple things here. Oh, don't want that. Let's do that. Okay. So we hit our top zone there. We hit our bottom there. Okay. Said we were going to come up, and we didn't. Uh-oh. Okay, give me 1 sec here. I just got to keep track. I got to keep score. Okay, it said we were going to have a top, and it was wrong. Look at that. Came up, said, hey, we're going to have a top zone over here. And we kind of did. Like, there was this low zone here, and we went top there, but it's not, I'll be honest, it's not the top I was looking for. But here's what this cycle tells me. Remember, I can see this into the future, right? Like, I saw this months, even years before we got there. This tells me that the market is changing. You're like, wait, how's it telling you the market's changing? Look at how vibrant these lows to highs are. Low point to high to low to high. In fact, I'm just going to color it like just really nice, vibrant lows to highs. Look at that. Boom. But then look what happens. It gets really dull. Like it's not persistent. It gets really dull here. And then we get into a nice vibrant low to high here again. And we'll dive over there in just a sec. Right? So the first thing as soon as I see this, I'm thinking, okay, the market's probably going to act a little funky. I actually need to probably change my cycle a little bit or add a different cycle. And so what I would do is I'd go here and I'd add a shorter term cycle onto my chart. And I'd actually have to zoom in if I'm going to play this time because we were in a downturn. And so sometimes it's just best to stay out completely and wait for things to turn back up. And you would have waited. The top would have been roughly in that January time frame, end of December. I think we hit the bottom around about a year later. So you'd be out for about a year, maybe a touch longer, right? Or you'd pull in the short-term cycles. And the short-term cycles should give you an idea of how to buy in and, take profits in more of the shorter term. So let's take a look at what happened. Okay, so we had our high there, and then the cycle kind of went sideways a little bit. I pull in my short-term cycle. Okay, and I'm not going to include my short-term cycle in my stats in terms of the 80% accuracy, but you'll see how accurate it was. There's the low, my short-term, there's the low. There's the high, and you kind of hit the high there. Says we're coming low. There's your low point. There's our high point. From there it says get out. You're going to hit a low point. There's our low. I'd say there's our low point right there. We kind of go sideways for a little bit. We do hit a high. Remember I said cycles don't give you the magnitude of how much a stock's going to move up. So it moved up just a little bit here, but it did say you're at a high point. If you're going to take profits now because we're going down, and that's exactly what we did there. Right? And then we moved up, and the stock market moved up, right? So this is how I would have taken a more shorter term cycle to help guide me in through the chop of a downturn that we had here. And then again, the cycle goes a little wonky, and this is probably where I probably just wait. Cycle goes, even the cycle, you can see it gets a little weird over here, right? But then it gets back into its cycle and starts to work. So even during the downturns, right, these are still moves we can make. And it was accurate, again, I would say about 90% of the time, which is what we want. That's what we're looking for, right? So now that we're kind of out of that choppy area, I'm going to pull back just the long term. I'll pull off the short term. And let's see here once we kind of get moving. So that's over here. Cycle comes back into attack. So it was a little off here, and I made notes of that. So, the accuracy wasn't great, although it did say high zone, and we did hit a high zone. So it was still kind of working, but it just wasn't as clear as it has been in previous. So anyways, here we go. High zone, stock high, low zone, stock low zone right there. So it hit that really nice. So we had another top, another bottom. Both were accurate. Comes back up here. Look at that. Another top. Boom. Okay. And here's where the market keeps on moving. And then we hit it did say we're going to have a low zone here, and we did. I'd say the low zone is definitely a win. Top zone, we would have had brackets on the top or a trailing stop here. So even though that did bounce back a little bit, we should have kept going up there. Okay. Well, then here's what I want to show you with where we are now. This is where we're going to end this video. And again, if you want more of the case study of the long term, I'll link that video up here. Look at this. Remember, this cycle was projected has been in here months, years before the stock market ever did what it did. But boom, it showed us our most recent high point before we came down. And then check this out. If I put on the short term, let me just put on the short term here, because long term we're still coming down, and I believe we're going to be coming down until about October, so a couple more months. But that doesn't mean we don't have little bumps up. And look at the short term. It showed us, hey, even the long term, we are probably going to come down more. In the short term, like the next 10, 15 days, we're at a low and we're going to go up. And there we are. There's our low, and we're currently going up. How long will that short term last? Well, I think we've got a couple weeks before we see the market fall back. I guess you could come back to this video at the end of August and see if I'm right or if I'm completely wrong here. However, if I do the math, okay, and I wrote down here since 2020, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 times the cycle was right and 2 times the cycle was wrong, which equals an 80% accuracy, and that's exactly what you want when it comes to you in the marketplace and using cycles in the marketplace. All right. So this is what we do in the Generation Wealth Investment Club. We aren't blind investors. We buy great companies. All right. We try and find great deals. We try and find when the market's going to be coming down using cycles, or when the market's going to be going up using cycles, to help give us the best advantage. And it's why right now we're averaging over 40% year-over-year growth. Well, the stock market is averaging, last year did about 25%. This year so far we're up about 12. Generation Wealth Investment Club, we're up over 100% over the last 18 months. So if that's something you're interested in, two things. One, you can go watch my other video on cycles, case study. I go over 18 years. I'll show you how it worked and what we would have done. And then number two, if you want to join us, reach out. All right, I'll have a contact around here, or if you already know me, send me an email somewhere. Send me an email, mike@moneycoachmike.com, and we'll hop on a call and see if this is the right fit for you. And if it is, then let's get you in and let's grow your wealth. All right, we'll talk to you soon. Bye for now.